Okay, so let's do a little bit of a recap here of what you need as a trader. You need to have a strong plan, something you can follow so you're disciplined and you're consistent in your approach to trading. So hopefully you get consistency in your returns. You need to have a good understanding of risk and risk management, how to use it, where risk come from. Things like simple optimal chart structure and clean, smooth flowing trends. You need to know where you have your 2FA for security. Also where to store your tokens when or if you decide to go ahead with this. You need to have a strategy so that you can employ your edge in the market. We just touched very briefly on support and resistance and that cradle zone. So these are the sorts of things, these are some of the things that you're going to need as a trader. But what about the things that you don't need as a trader? What are the things that you should avoid? Because I know this space very well. I know this education world very well. There's a lot of people out there you can't trust. I get it, and I'm going to address that. I'm not one of those people, and I hope that I've been able to build some trust by just telling it how it is and being open and straight with you on what I actually use. But there are some things to avoid that you need to creep into your thought process if you catch yourself thinking along these ways. Number one, don't take tips. Tips are how you get burnt. I don't give trading signals. As a matter of fact, every day I'll tell people what I'm looking at in the market, but my role is to empower you to know what to do. So I give you the strategies, I give you the tools, but I want you to find your way yourself because it's up to you only. I can give you the tools, but it's up to you. So don't take tips. If it doesn't match your plan, stick with your plan. A great saying that I learned early on is plan your trade and trade your plan. Now, I don't care how good this sounds or what people say. Don't forget, everyone's got their own view on things because they want that particular outcome. The only outcome I want is for you to do well at trading, and I'm going to give you the tools for that. So don't take tips. Number two, analysis paralysis is something that is very, very common. Now, you might not know what that means right now, and you might not have come across it yet. And sometimes when you've got too many choices, you can't make a decision. Now, everything I've been saying to you is to empower you, to educate you, to give you a level of understanding so that you can be decisive. When you're decisive, you will make decisions, and you'll make those decisions with confidence and you'll stand behind them, and you can learn from those moving forward by taking screenshots and monitoring your own progress. So looking at too many traders' views, looking at too many different indicators and trying to mix it all together in a big soup becomes a mess. You become disempowered because you don't know what to do, and you start to get analysis paralysis because you just don't understand what's going on. Stick with a plan, find someone to help you, and stay with that. Number three is emotions. It is an emotional space. I talk to you now as I am standing here, relatively outgoing, having a bit of fun, talking it through. But I can tell you right now, I have a joke that I become basically the accountant with short sleeves and a brown tie when it comes to me trading. Now that's no offense to any accountants out there, not at all. It's more just to let you know that my personality needs to change when I enter that market space. I can't go in there looking for fun. I can't go in there looking for a good time. I can't go in there looking for what I want to achieve. I've got to go in there with a plan of attack. Emotions come into this space because they can make you think on an instant. I'll give you an example. How many times have you made good decisions when you've been angry or upset? Very, very few. I'll say one thing. Most of the time, the decisions that you make will cost you in that space. Consider this. You write an email reply back when you're all fired up. The next day, you probably wish you didn't send that email. So we do need to manage our emotion, and that's part of the checklist environment, is to give you something to follow and be disciplined about, to give you that confidence to execute your plan. FOMO, fear of missing out. It's talked about a lot in this space, and we do see it a lot in this space, and it's something you need to avoid. It does tie into the emotional side of it because we feel like we're missing out. We've got to climb on, clamber on. I don't trade when things are going crazy up. I wait for my pullback. I wait for my opportunity, and you should too. So don't let FOMO, or the fear of missing out, factor into your trading. Thinking. This is going to sound a bit bizarre, but thinking does cost me. I can remember a trade, oh gosh, quite a few years ago now. It wasn't in crypto. I wasn't trading crypto at the time. But I thought the market couldn't go high. I thought, it's not going to go high. I had a perfect little cradle trade, didn't take that trade. Now, as much as it didn't cost me any money, the opportunity cost was immense because it ended up being an absolute screamer. What it taught me was the market can and will go higher. The market can and will go lower. So, trade your plan, stick to your rules, and don't overthink things. Sometimes thinking can get in the way in many different areas. If you think about this, this, and this, you might think that is logic. But thinking changes due to mood, due to different parts of your life, what's going on in your world, A strategy shouldn't change. So don't let thinking get in the way. A lot of people you'll hear, especially in this space, is buy the rumor, sell the news. Yeah, sure, go for it. But you've got to be bang on your timing. And generally when we start to see things move, we've got to confirm that if the rumor is true, the market does move in either direction and then it moves back again. It's just a low probability game and it's not one that I'm really that interested in. And if you do have that information, well, as much as this space is not yet regulated, I don't recommend insider trading at any stage. So best to stay away from that. Stop doing every course under the sun. Again, find something that fits you. If somebody's showing you things that just don't make sense to you, if what I'm saying doesn't make sense to you, I don't want you to come on board and do more with me. If it does make sense to you, if the way I talk, the way I present my ideas, and the simple things like the cradle zone and break it, if that makes sense, if you can see a general early stage understanding, then maybe we do work together. But you don't need to think that by doing lots and lots of courses, you're going to find what's right for you. I'd much prefer you shop around and find what does resonate with you and then commit to it. That's really important, guys. If it doesn't make sense at the day one, it probably won't make sense later on. We all think differently, we all learn differently, and we all portray our messages differently. There are lots of good traders out there doing great things. There are lots of people out there that are not. Find something that works for you and do your due diligence. Big one here, avoid focusing on making money. Again, a painful story of mine was doing exactly this. I had had a really good year back in, I was still in London, 2009 or 10. And back then, I had a New Year's resolution to make X that following year. And I thought that trading, because I'd been doing so well, I thought, you know what, I can hit that number. It was a monetary figure. I can hit that number. Problem was, I went into trading come that new year, risking 3% risk on each trade. Now, I'll talk about risk more later, but I always look to risk about 1% or less per trade. Why? Because I'm looking to minimize my risk and manage my risk. That's the first rule of trading, okay? If you haven't got capital in trading, you haven't got any business. So you've got to maintain what you've got first and foremost. Now, what I did was I jumped in with all the gusto of a much more younger, possibly even with hair on my head me, and I basically blew out the account. I didn't blow the whole account, but it put me back quite a lot, and I did it all in the month of January. So focusing on making money tends to give you the opposite of the outcome. You need to focus on the process, focus on the strategies, and score your trades based on the checklist so that a good trade is not just a profitable trade and a bad trade is not just a losing trade. Because a profitable trade, the outcome might be a profit, but the actions that you took to take that trade might be all wrong. And what this does is it reaffirms negative behavior, positive results. You can't afford to have this happen if you want to be in this space long term. So don't think about the money, think about what you need to do to be a good trader and do what good traders do. And the news. That's another one you can avoid as a trader. I know it sounds weird. When I trade at other markets, yes, there are certain news things that we need to be aware of. In crypto, we don't have a dated non-farm payrolls, for example. We don't have anything like that at this point. So to go through Twitter, Facebook, and all the different news sites, what that will do is give you a convoluted view. Now, I'm all for you being up on the space and reading things, but don't let them come into your factoring of a trade or no trade. You should stick to your rules, and you should focus on that and that alone. Trading based on news, bottom line is this. If you think you're going to have an edge with that, by the time you get the news, you're late. Don't try it, won't help you, take my word for it.
The Trader Cobb Crypto Show, talking business in blockchain.